Welcome to Uncovering Trusts, a podcast by the Edison Group. We're a content-led IR business integrating analyst content, digital targeting, and investor engagement. Each episode will uncover the distinct features and latest developments of a selected listed investment company. So tune in to find interesting investment ideas and to stay on top of what's happening in the investment company sector. I'm your host, Will Manuel, and today I'm joined by Milosz Papst, Director of Investment Trust Content at Edison Group. Today, Milosz will talk about Baker Steel Resources Trust, and we're going to refer to it under its ticker, which is BSRT. So Milosz, thanks for joining us.
Hi, Will. Great to be back.
Before we delve into BSRT, can you maybe tell our listeners more about the thematic piece on US small caps Edison's investment trust team recently published?
Sure. We were encouraged to look into the US small cap theme by the price action in this market segment in July, triggered by the weaker than expected US inflation data, prompting an increase in the probability of a September interest rate cut. The sharp market sell-off in early August due to fears of a US recession overshadowed this theme, but given that the probability of a US recession seems relatively low, I believe it is worth revisiting the theme. Lower interest rates typically have a larger benefit to smaller cap businesses, as their prospects are more likely to be tied to the strength of the US domestic economy, and lower rates generally result in higher investor risk appetite, which benefits small cap equities. A successful bid by Donald Trump for a second term in office could also be considered a positive for small cap stocks, given his pro-business stance and the potential for lower taxes and decreased regulation. While this could be coupled with higher tariffs on imported goods due to US-China trade tensions, negatively affecting corporate profits, these should have a disproportionate effect on larger businesses. Valuations certainly add to the case for smaller companies. Large-cap US companies look considerably less attractive in terms of forward PE, price-to-book, and price-to-sales multiples, while offering a lower dividend yield. Although earnings growth expectations for 2024 favor large cap stocks, when we look at 2025 estimates, small and mid cap stocks are expected to generate superior growth versus large cap stocks. I would also note that the relatively small size of the US small cap universe compared to the mega cap stocks suggests that even a moderate reallocation away from US large mega caps into small caps may have a significant impact on small cap companies' share price performance. In the thematic piece, we discussed the two members of the AIC North American smaller companies sector, along with 4 out of 5 funds in the global smaller companies sector that have a meaningful exposure to US small caps. We also discussed the case for listed private equity trusts as a play on small US companies. Finally, we have discussed Edinburgh Worldwide and the US small cap theme with Bill Chatter, global small cap investment specialist at Baillie Gifford, in a recent insightful interview.
Great, so thank you for that. It's a thematic definitely worth taking a look at. And now turning to BSRT, I understand it invests primarily in unlisted mining companies. Can you tell us more about its investment strategy?
Yes, of course. The core of the trust's bottom-up value-focused strategy is to invest in a concentrated portfolio of, 10 to 20 unlisted junior mining companies, which may be involved in the exploration for and production of base metals, precious metals, bulk commodities, thermal and metallurgical coal, industrial minerals, oil and gas, and uranium. Its portfolio may include single asset as well as diversified natural resources companies. The trust's investment manager is Baker Steel Capital Managers, a specialist natural resources asset management and advisory firm headquartered in London with a branch office in Sydney. It has an experienced team of fund managers covering the precious metals, base metals, and minerals sectors worldwide, including equity markets and underlying commodity markets. An important feature of BSRT's investment strategy is that the manager focuses on capturing the alpha arising from the development progress made by these businesses as they move from a pre-feasibility stage to completion of a definitive feasibility study and then towards mine construction. Therefore, the trust does not merely provide geared exposure to rising commodity prices.
Right, thank you. That's interesting. I understand there's a lot of upside in junior mining companies, but there's also quite a lot of risks. So how does the trust manager address these risks?
I would start by highlighting that the trust's objective is to create value through driving the development of investee companies, as well as exploiting market inefficiencies and pricing anomalies. The trust does not exclusively invest in plain equity. In many cases, the company seeks to mitigate the risks arising from investing in early-stage mining businesses by investing through convertible loan notes and providing funding in stages as developed milestones are met. Although the current share of convertible loans in its portfolio is relatively low at around 20%, as several of the trust holdings matured and therefore the trust converted its investments into straight equity in recent years. The trust also invests through royalties, which offer the potential for regular income once projects come on stream.
Right, thanks. So you mentioned that the trust's portfolio matured recently. Can you shed some light on this?
Yeah, sure. The trust currently has several holdings that have operating mines or projects that have just launched production. These include the trust's two largest holdings, which combined make up roughly two-thirds of its portfolio. Futura Resources, the owner of two coking coal mines in Australia, and Semos, a Moroccan cement producer. It also has holdings in several production stage listed companies, such as the two gold producers Caledonia Mining Corporation and Metals Exploration, as well as Silver X, whose Tangana silver mine also mines gold, zinc, and lead in the process. Caledonia Mining Corporation operates the Blanket mine in Zimbabwe and holds one pre-development project and one early exploration project. And moreover, it acquired the Bilboes Gold development project from Baker Steel Resources Trust in exchange for its shares and a 1% net smelter royalty from Bilboes Gold, with the trusts, which the trust currently holds.
Oh, right, that's interesting. So, what are the implications of this for potential distributions to shareholders?
The trust offers the prospect of potentially significant income. The trust manager estimates that upon full production ramp up of its major projects, that is Futura Resources, Semos, and Bilboes Gold, as well as the Prognos silver mine in Russia, in which the trust holds a net smelter royalty, the trust portfolio could potentially generate total royalty and dividend income of around 11 to 17 million pounds by 2025-2026. This represents a very healthy double-digit annual yield on its current market cap. That said, this is of course subject to project execution risks, and I believe that Bilboes Gold is likely to move to production later than 2026. Finally, I would also note that the trust has been receiving dividends on its stake in Caledonia Mining Corporation.
Right. So, okay, there's indeed some very solid potential for income from this company. Interesting. Maybe now you can say a few words on the trust's historical performance.
Yes, so the junior mining sector has recently experienced multiple headwinds. Higher interest rates coupled with high inflation and geopolitical headwinds, as well as less demanding valuations of more established mining companies, translated into a more challenging funding environment for development projects, especially for single asset junior mining companies. These conditions have reduced global appetite for M&A and IPOs, also in the natural resources industry, which have made it difficult to sell junior mining projects to larger, more established trade buyers or float them on public markets. The trust's 12-month NAV total return to end July 2024 stands at a strong 17%, supported among others by the revaluation of Futura Resources following their successful fundraising in September last year. The trust's 5 and 10-year NAV total return performance to end July is more modest at 2.7% and 3.6% per annum, respectively, due to the above-mentioned sector headwinds affecting, for instance, its Tungsten West project, but also the trust exposure to assets in Russia, Polar Acquisition, and Azarga Metals, which were heavily written down after Russia's invasion of Ukraine. However, I would note that this performance does not differ much from the share price performance of listed junior mining companies over these periods. Moreover, BSRT's NAV was not subject to the same extent of derating as listed junior mining stocks since its inception in 2010. We believe that this was assisted by the fact that many of its investments were structured as convertible debt and royalties rather than plain equity, as I've just discussed. That said, I would note that the potential peak in the interest rate cycle at still relatively moderate real interest rates may further support precious metals prices, as illustrated by the recent price action in gold, to which 16% of BSRT's portfolio had exposure as at the end of 2023. And the peak in the interest rate cycle, the turn into interest rate cycle may also drive a recovery in global M&A activity in the natural resources sector. Moreover, secular drivers such as the green energy transition and the resulting high demand for certain industrial and specialty metals coupled with supply constraints for some of the commodities, could prove supportive for the sector going forward as well. Finally, further operational progress at Futura Resources and Semos this year are potential NAV catalysts. This embedded optionality is important to note in the context of the trust's discount to NAV, which is currently around 30%.
Right. So digging a bit more into Futura Resources, because that's a key part of the portfolio. You mentioned the successful fundraising in September. What was the significance of this?
The company completed a 35 million Australian dollar financing in September 2023 via a 30 million convertible note and 5 million in-kind commitments from contractors and suppliers. This was a major milestone for the business as it fully funded the advancement of Wilton, one of its 2 coking coal mines, to production. This resulted in a significant revaluation of the holding during the trust's full year 2023 valuations review. Wilton already launched production early this year, with first coal shipped to the coal handling and preparation plant for processing and inaugural coal sales. The trust management highlighted that the company has seen encouraging coking coal quality and recoveries from the mine. However, the fair values of the trust's equity and royalty investment in Futura remain unchanged following the half-year 2024 valuation review, as more data is needed to justify a reduction in the development risk discounts applied to the valuation model for this holding. The end June 2024 valuation also does not capture the offtake finance agreed post-reporting date to fund the quicker development of Futura's second mine, Fairhill, which the company now expects to move to production in the fourth quarter of 2024. BSRT highlighted that the above developments will be examined during the year-end valuation review in anticipation of both mines reaching full production in 2025. The company had earlier indicated Futura's EBITDA potential of 80 to 90 million Australian dollars upon full production ramp-up, with the midpoint implying an undemanding EV/EBITDA multiple of around 1.5 times based on Futura's current fair value.
Right, thank you. And how about the trust's other large holding, Semos?
Yeah, so the trust holds a combination of equity and convertible loan, which translates into a 31.3% stake on a fully diluted basis in the business. Its first production line has been operational for several years now and reached its full production capacity of 250,000 tons per year in the second half of 2020. Though capacity utilization in 2022 and 2023 was somewhat lower. The company recently decided to build a clinker manufacturing plant, which will make Semos vertically integrated. And this is scheduled for commissioning in the second half of this year, with the full benefit in 2025. Semos was revalued by 11% during the half-year 2024 valuation review, driven by rebounding sales this year after a more muted 2023, as well as good construction progress at its clinker plant.
Okay, that's good news. Are there any other aspects of the trust which you think is worth mentioning?
Yeah, I would highlight the high management ownership of more than 20%, as well as BSRT's distribution policy, according to which the company will distribute no less than 15% of the aggregate net realized cash gains after deducting losses for each financial year. And the distributions may include share buybacks, tender offers, and dividend payments.
Right, thank you very much, Milosz. I think you've given us a very good rundown about what BSRT has to offer. So you've been listening to Uncovering Trusts, a podcast by the Edison Group. If you want to find out more about Baker Steel Resources Trust and other investment companies we cover, please visit www.edisongroup.com.